Now, after every price rally, every short-term correction did not lead to a major correction, or every short-term fall may not bounce back and lead to a new high. It is important to understand the anatomy of a healthy pullback. I will guide you to make it clear that what exactly is a pullback, how does it look like, and what are the three key points of a healthy pullback. Let us take an example of this particular chart. I'm using the Heikin Ashi candlestick charts over here. You can use the Japanese candlesticks alongside volumes. We are looking at the Dixon Technologies chart on the daily time frame. As we can see that over the last few months, it has been in a steady uptrend and it has gone through periods of pullbacks. Now, the word pullback in an uptrend means that when prices have gone up, or in case of an uptrend when prices are going up, whenever they come down, that's a pullback. Now, whenever they are coming down, will it lead to a further major retracement correction, or will it just come down a little bit and go back to its previous high and more? So this is where essentially the terms like buy on a dip or sell on a rise, these are called pullback trading. Now, I mentioned the 3 points necessary to understand the anatomy of a healthy pullback. Number one is the stability of the uptrend. The stability of the uptrend means the pullback should not be deep enough, which will look like a major correction, or in other words, it should ideally not break below previous highs. So whenever a stock has gone into a new high, breaking above its previous highs, and whenever it comes down next, it should not slip below that. That's a sign of a structurally a healthy uptrend. That's point number one. The trend should be intact. Now, point number two. Point number two is the pullback should be as shallow as possible. If you honestly ask me, I prefer pullbacks which lasts for just 1 or 2 candles. I like to call them shallow pullbacks. However, if they last for more than 2-3 days and if they lead to a fall, they are deeper corrections. As long as the trend is intact, it is still all right. This is point number two, that the pullback should not be deep enough. And now point number three. The point number three, according to me, is a very interesting point because this is where we deviate from price and we look down at volumes. Volumes are the number of shares exchanged hands or the degree of participation. Now, if the overall structure of the trend is positive, is still intact, and it is going through a pullback / short-term correction, then ideally the average volume should be falling. Don't look at each and every volume bars, whether they're increasing or falling. The overall drift of volume should be falling. If that is the case, it means that the stock is taking a breather, a halt in an overall upward structure, and the probability of a reversal is high. I purposely use the word probability because we can never be certain with price action and markets. And that's why keeping these 3 points. Number one, the structure should be intact. It should not break below the previous highs. That's where you tend to get supports. And when you're coming down, if the volumes are low, it leads to a decent, healthy pullback. And in that case, you're close to the supports and the probability of further upsides going back to the previous highs, this kind of a move increases significantly. So keep this in mind if you are into pullback trading, and do share your thoughts about these 3 pointers. Till then, take care of yourselves, trade well.